Okay guys, welcome back. This is going to be episode 3 for the ongoing OT 2025 tutelage. In this episode, this is going to be amplified lecture on the episode 2 because I will gonna discuss the same liquidity concept which I shared in the episode 2. So we will be discussing that here with that example, with that same logic in mind, and also what we can expect in the upcoming week. Okay, what is my opinion about the price, okay, for the next week. But first we will go back to understanding liquidity. Okay, so let's get into it now. Okay, from here to here, this is the swing high, this is the swing low, this is also the swing high. Okay, this is the swing low. So right now there is no annotations on the chart, it is naked. So you can just pause the video and look what you are seeing with what I have already taught you in the episode 2. With that perspective in mind, look at this chart, pause the video and look at this chart, what you are observing. What I told you, above the swing highs we have buy stops, below the swing lows we have sell stops. Okay, so what you are observing, just write this down in your journal. Write down your observations, pause the video. I know most of you will not pause the video. You just want me to share that, but that is not going to help you eventually, because you have to understand that you have to do all these things which I share in the episode 1 and 2. You have to do that in your own charts. You have to study that and you have to do it every day. Okay, this is not something that you will do once and you will be like master at it. No, you have to practice it every day with the perspective which I shared in the episode 2. So now let me just put on the annotations and let's start the episode 3. Okay, I have put all the annotations on. It's the same chart, but now it has all these lipstick. Okay, all these marked annotations. So you have to also do this in your own charts. You can't just take screenshots of my charts from the video and you will think that you have done the work. No, you have to go into your own charts and do the study. Okay, so now let's understand few things. This candle is the 12 a.m. midnight opening. Okay, everything is in New York local time always. Okay, this is the midnight open. This is when the market really starts. So from 12 a.m. to 5 a.m. it's the overnight session. Okay, it's the overnight London session. Okay, so what happened in London session, you can see it opened here. This is just, I have extended the opening price. This is the opening price. You can see here what's the opening price. It's 18,345.3. that is the midnight open price. That is very important. Okay, midnight opening price, 12 a.m. opening price is very important. Okay, so I have marked that. What price did it? Went higher, it came down below the opening price. It came down below the opening price, created the initial sell side liquidity. Okay, it's the initial sell side liquidity because it's a swing low, and below swing low we have sell side liquidity or sell stops. Then it ran higher all the way up to here, then started moving lower. So what's above the swing high? That's the buy side liquidity or buy stops. So it went down and took the sell stop. It took out the sell stops first. It took out the sell stops, and 5 to 7 is the is the London lunch. So after taking out the sell stops first, it went higher between 5 a.m. to 7 a.m. because at 7 it starts the New York session. From 7 till 11:30 it's the New York morning session. Okay, so it took out sell stops, and between 5 a.m. and 7 a.m. it ran higher, took out the minor buy side. This is also swing high. Just draw that out. Above the swing high we have buy side liquidity. Okay, and that is the minor buy side. Okay, that is the minor buy side liquidity. So market went down, took the initial sell side, collected the sell stops. Here retail, how now you have to think how retail is thinking and how you as a student of algorithmic thinking, how you will try to understand this in terms of the algorithm. Okay, how algorithm will spool the prices higher towards the buy side. Okay, then it took the buy side, minor buy side. Then at 9:30 when the US equity is open, okay, it went down below the sell side, here. Again it went down below the sell side. Below the sell side we have sell stops. So now again retail is thinking it's a breakdown, market is trying to go lower because retail chases price. Okay, why retail fails every time? It is the very reason because they chase price, and we as smart money and as algorithmic thinkers, we don't chase price, we wait and anticipate. Okay, we anticipate the next movement, we don't chase price. Okay, in terms how retail do that, because retail tries to chase price on the breakout and breakdown, and there are several other things they do but basically retail is always chasing the price. Wherever price is going, they have no idea what's going to happen next. They just try to chase that move. Okay, again what happened? It went below the sell side, took out sell stops. Now what's resting? It's the initial buy side of the London session. It's above this because people, those who sold in the morning, okay, and few people, those who already trailed their stop losses, they were out. But people, those who have deep pockets and their stop loss was above here, they were eventually out of the market. Friday was the choppy session. It took out both sides. It took out sell side first, then it went towards the buy side. And 11:30 to 1:30 is the New York lunch, and from 1:30 till 4 it's the New York PM session. Okay, so market took out both side. But now let's go in little deep and understand few more things. Okay, I told you this 12 a.m. opening price is important. So just extend it throughout this session. This is the midnight opening price. Then second is the 8:30 open price. That is also very important because many times we have the high impact or medium impact news drivers at 8:30. So 8:30 opening price is also important. So we extend it. And this is the 9:30 opening price, which is the equities open, okay, for the New York at 9:30. So we have these three opening price and we have to extend it throughout. And now let's try to understand why it is doing all this, okay, and what is the logic behind going down and up. This is the open price. Above the opening price it's premium, okay, above the opening it's higher. If hypothetically think this is price opened at 5 rupees and it went higher till 15, okay, so from 5 to 15 it went higher, so 15 is higher than 5, so it's in premium, okay, it's in premium. But when price moves lower below the opening price, okay, as you can see it dropped below the opening price, so then it is in discount because something opened at 5, now it is trading at 3 or 2. This is just hypothetical. I'm just trying to articulate what's in my mind, okay, and I'm finding it little difficult because I'm not that a social person. I don't like to speak a lot, but this is something I have lot of interest in. That's why I have to do it, man. I have to overcome this, and I will eventually. No worries with that. But what I am providing is something really useful if you will do the hard work. That's what is required from you. Okay. So now price, as I told you, above the open it's in premium, and below the open price it's in discount, okay. So it went down, took out the sell stop, and price is in discount. and then it went higher into the premium and took out this minor buy side. Okay, then it consolidated and again came down below the 930, 830 and the midnight open price. So it's in deep discount, it's in oversold condition. You don't need any indicators. Okay, I'm telling you this. You don't need any indicator to identify the discount, like oversold and overbought conditions. You don't need that. You just need price and time. That's all is what required. Okay, so I'm trying to build a narrative. Okay, because you have to learn to build narratives. What's the story behind all this? You have to understand it, how it's moving, what is the reason, when it will move. Okay, so it will not happen in one day. And if you will just watch this videos on my YouTube channel or any other if you learn from any other trader or from my videos or from ICT videos or from anyone, okay, but if you will not do the work by yourself, you will not gonna get it. Okay, and as soon as you will understand this, that will be more beneficial for you, because at the end of the day you have to put the real fucking work in your own charts. You don't have to believe me what I'm saying. No, don't believe me at all. I'm not here to make you believe in something that I believe. No, I'm just here to show you something. And if you are really interested in learning trading and how to read these markets, then go into your charts and do what I'm telling you to do. And after doing it several times, you will understand it. You will be able to see what I'm trying to say, because these things repeat. These things repeat. And if you will be seeing that every fucking day, then there is a high probability you will be like outpacing the number of traders, those who are learning this, because most of them are just watching the video and because they want to do this, because they think this is very exciting. And what I'm telling you with my experience, excitement is deadly in the markets. As a trader, you need this shit to be boring. Okay, you don't have to feel excited and all hopped up like, yay, I will do this. Okay, do your work, but don't get excited by it, because you have to understand, like like you have to divide it like this. Okay, trading is 80% psychological. 80% of the game is psychological, because when you are pushing the button, okay, when you are buying and selling something and you don't know what's going to happen next, you don't understand that at that time. Okay, there are lots of emotions triggering in, and if by luck you get a win, okay, then that is a very bad thing. That is not good. You just got lucky and now you are excited and you will be in rush to do it once again. Let me do it one more time. I made 5,000, man. Let me do it one more time. And that excitement will lead you to trade more, and the rest, you know, man, how it is. The individuals, those who are listening to this and they have traded for some time, they know how it feels. because you start doing things, because your state of mind gets into that fight or flight response mode, and you don't realize it because there are lots of emotions triggering in subconsciously, and emotions are real because they have the physical evidence. Emotions are real and they have the physical evidence. So when the operator is in a state of fight or flight, and your mind doesn't know about money, okay, it doesn't work like that. Your mind doesn't know about money. Your mind sees loss, it only understands death, and it only tries to protect it from that. That is what we have. That is what we have from birth. That is the gift of the creator. But as a trader, okay, and being in a state of fight or flight as a trader will not gonna help you at all. You have to be very calm and composed while trading. It should not be exciting and all that. No, you are doing it wrong. Because when you are excited about something, okay, and people, those who want me to talk about technicals, I will do it. But this part, this psychological aspect of trading, people don't talk about it. People don't talk about these things. And without them, without these psychological barriers, without overcoming these psychological barriers which we have as humans, it is not possible to be a consistent profitable trader, period. You can have the best strategy from the world, but still, if you don't, if you can't understand yourself, how you are going to react in different situations,